The indicators suggest heightened volatility in the markets. The indicators suggest volatility ahead. We must prepare for turbulence. The PMI indicators reveal a fragile and uncertain future. The PMI indicators suggest a fragile and uncertain future. Tariffs compound the strain on our export capacity. The pressure is mounting. Rising export costs and tariff pressures. Conveyors are stopping now. The line hasn't moved. Production's halted. Lines forming at City Hall. Heard the factory's closing. This line's not moving. High-end consumer activity remains active, suggesting a modest rebound in consumer sentiment. High-end consumer activity shows modest gains, suggesting cautious sentiment. A modest rebound, but without exuberance. Conflicting signals everywhere. The patterns are ambiguous. The horizon extends beyond calculation. The future of the economy remains uncertain.
ツマンおじ今日のニュースを読みます。Reuters. U.S. business activity steady in January. Consumer sentiment improved. By Lucia Mutikani, January 21st, 2026. Summary. Import tariffs cited by S&P Global as key driver of high prices. S&P Global survey shows exports hit 9-month low in January. Consumer sentiment improved in January, University of Michigan survey shows. Washington, January 23rd, Reuters. U.S. business activity was steady in January, as an improvement in new orders was offset by a lackluster labor market and the lingering concern among the firms of higher costs because of import tariffs, a survey showed on Friday. S&P Global said its flash U.S. composite PMI output index tracks the manufacturing and service sectors, inches down to 52.8 this month from the 52.7 in December. A reading above 50 indicates expansion in the private sector. Both service and manufacturing flash PMIs were little changing this month. S&P Global said the composite PMI was consistent with the moderation in economic growth at the turn of this year. The government reported on Thursday that the economy grew at a 4.4% annualized pace in the third quarter, driven by strong consumer and business spending on intellectual property products likely related to artificial intelligence, as well as a smaller trade deficit. The Atlanta Federal Reserve is forecasting gross domestic product increase at the 5.4% rate in the October to December quarter. The fourth quarter GDP report, delayed by the 43 days federal government shutdown, will be published on February 20. The S&P Global Survey's measures of new orders received by businesses rose to 52.2 from 50.8 in December, but export fell to 9-month low, pulled by decline in both goods and services. Business confidence weakened, dropping slightly below the average seen last year. S&P Global said the demand dampening impact of higher prices, geopolitical worries, and federal government policies remains a concern among many firms. The survey continued to paint a picture of labor market stagnation, which S&P Global said reflected concern over the rising cost and softer sales growth in recent months. Its measure of private sector employment edged up to 50.5% from the 50.3 last month. Some businesses reported difficulties finding staff, which could be linked to an immigration crackdown the economist said has reduced the labor supply. Tariffs widely blamed for increased cost. The survey's gauge of prices asked by firms for goods and services ticked down to 57.2, still among the highest recorded over the last 3 years, from the 57.3 in December. A measure of prices paid for input fell to a still high 59.7 from the 61.9 last month. The elevated price measures suggested inflation could remain high for some time. Businesses have observed some of the duties from President Donald Trump's wide-ranging tariff, helping to avert the much-feared big inflation surge. The U.S. Central Bank is expected to leave interest rates unchanged next week, while policymakers watch inflation and the labor market. Increased costs, widely blamed on tariffs, are again cited as a key driver of higher prices for both goods and services in January, meaning inflation and affordability remains a widespread concern among the businesses. And Chris Williamson, chief business economist at S&P Global Market Intelligence. While a separate survey from the University of Michigan showed consumer sentiment picked up this month, inflation and labor market worry lingered. The University of Michigan's Consumer Sentiment Index increased to a final reading of 56.4 from an earlier estimate of 54.0. The index was at 52.9 in December. The improvement this month occurred across the board, rising among the Republican and Democrats alike. However, national sentiment remains more than 50% below a year ago, as consumers continue to report pressures on their purchasing power stemming from high prices and the prospect of weakening labor markets, said Yohan Su, the director of Survey of Consumer. The survey's measure of consumers' expectation for inflation over the next years slipped to 4.0%, the lowest reading since January 2025 from an earlier estimate of 4.2%. Consumers' expectation for inflation over the next 5 years dipped to 3.3% from a preliminary estimate of 3.4%. Long-term inflation expectation edged up from 3.2% last month, with affordability pressures proving stubborn. A near-term sentiment rebound looks unlikely, said Oren Klekin, financial market economist at Nationwide. 以上です。